Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you what you need to know before you go, and that starts out with talking about some economic data, see how that impacts the overall markets, maybe mix in a little bit of geopolitical fodder, and then talk about some option strategies we've been implementing into our portfolios that is based on those assumptions. All right, so before we go, let's talk about the economic data. And hey, before you go, smash that like button for me. It helps out. Feed some bots to run out there and chase down some folks that look like you. Anyway, across the pond, we talked about this. We got a lot of economic data coming out across the pond, more so than here in the United States this week. This week here, what do we have? A bunch of talking heads talking interest rates. Powell yesterday really kind of backing off a little bit of this 25 basis points and really starting to talk about 50 basis point moves at the next couple of meetings. So it looks like we're going to have about 3 with 50 basis point moves. We could be closer to 2% at that point. So keep that in mind. We're also going to be hearing from a bunch of other Fed governors that are probably even more hawkish than Powell there. And then also, like we talked about, we're going to be having Powell speak again, but a couple other Fed governors throughout this week. And we also get the crude oil inventories and home sales this week. We also get some good PMI data, which is Purchasing Managers Index. Why do I like purchasing managers? Well, the purchasing managers see the demand from you and I, and they actually start ramping up or pulling back on the purchasing of the raw materials that goes into the manufacturing process. That's important because that's forward looking. I don't like to necessarily look at what the company has already done in their earnings or, data points that just tell us where we are right now. I like to look at the ones that are forward looking because then that tells us where we are escalating to or pulling back from. So keep that in mind. We're going to be keeping an eye on that more so than anything else. Now we get over to the markets. We've been talking about all of this, the lack of supply in the system right now because Russia going to Ukraine, going into the Ukraine, we put on some sanctions there on their oil. That's going to limit the supply in the overall global infrastructure there. So with that supply coming back, that's why we're seeing higher prices here in the United States. And we're already starting to see some states remove the gas tax that is basically for infrastructure, roads and things like that. That 50 cents drop happened over in Maryland. So are we going to see a bunch of other probably Republican states trying to do something very similar there? Now with the overall markets with crude oil, having said that, now the limit on the gas tax there, or the removal of the gas tax, is actually going to allow people to buy more, right? If they're going to be saving a little bit more. Some folks are claiming, hey, it doesn't make a big deal. Well, when somebody fills up their tank and it's about $5 less, yeah, it doesn't hit right away. But the fact of the matter is that $5 is spent somewhere else. And if thousands and thousands of people are spending $5 a different way, that creates velocity of money, folks. With that said, though, that would give upward pressure to crude oil here. But one of the things we're noticing is this pattern from this topping pattern here. So keep your eye out on this, a pattern like this, or even a finish probably as close to 112 in crude oil is going to make this look like a bit of a topping pattern there. Still in the hundreds, though, which is something we don't all want to see. Now, with Powell talking about those 50 basis point moves, look, what did that do to the bonds? Well, we talk about this. As they talk about interest rates rising, that puts downward pressure on prices of bonds. So when we're looking at charts of bonds and we see the price go down, well, that's because it's inversely related to the interest rates. Now, with that said, what is reflective in our portfolio is not interest rates. It is actually this price here. So what we need to do is lower all overall cost basis on these bonds because folks are chasing higher yield. The only way to get that return is to do covered calls that we talk about in these videos and these webinars that I do. So please check those out at YouTube, and you can see our inventory there of different videos. All right, gold still trudging up along this trend channel. That is acting as support. So we are going to hold on to that going forward as a support and resistance there. So I would say that risk is to the upside in gold as inflation is right around the corner there. Now, Bitcoin is starting to finally make these moves to the upside. A lot of these woes is the SEC going to come in and start regulating these folks? Well, I think they are, and that actually would be a good thing, because then it would open it up to more savvy investors, I guess, if you will, would bring in some bigger money and help spur this market. Because right now, the old money and cryptocurrencies is not driving the markets anymore. So we need some new blood in there. We got the VIX still in the 20s, but it is coming off. Now, something to note here with the pattern setting up from yesterday, we got a lot of topping patterns in the equities. So yeah, we did finish most of them above that 50-day simple moving average, but keep your eye on these candles here. We got these spinning top dojis. Confirmation would be basically a close below the previous day's wick. So we need to settle somewhere down around that 14,180, let's call it, just to try and get it below that number there. The low, 180 would be a good confirmation on that number. Anything above previous days is going to wipe out or erase that topping pattern. Now, Dow Jones Industrial Average doesn't look nearly as good as that last chart, but one thing we're noticing here is that it's at the point of control. So that's going to get a little more sloppy. Can't really rely on those chart setups when it is at a point of control like that, because of the fact of the matter is we've all traded that price and nobody really cares about it anymore. It's not something that we are thinking we need to trade. Again, here, looking at a topping pattern, E-mini S&Ps not confirmed. As a matter of fact, right now, it looks like we are erasing that topping pattern. I'm still leaning towards the risk here, folks, is to the downside, but that is not quite as strong as what we were looking at before in the past couple of weeks here with this negative pattern. We're starting to break out of that. So the bulls and bears are actually starting to really come back into the ring and battle it out here. So close at the end of the day is going to be key for whether or not we're going to be resuming downside pressure or we've broken out of this pattern. So watch out for banks, basically crude oil stocks, ConocoPhillips, any of those, Exxon. We're going to be looking at some of those stocks for upside, because as price goes higher, if they lower the gas tax, these guys are still getting that elevated price, but the folks at the pump feel like we're getting a deal. So we're going to be spending more that way. So it will help out the crude oil companies. Banks, they're going to do well. Powell's talking about 50 basis point moves here. Well, banks are going to do very well. Why? Because they do better when interest rates are higher. They get more of a margin on their spread. When interest rates are suppressed, it's really a battle on who can race to debase, if you will, or lower their overall interest rates there. Well, when interest rates start rising, those 25 basis point differences between two different banks aren't going to be fought over as much as when we are just at zero interest rates, right, folks? So keep your eyes on that as well. So bank stocks to the upside would be where the risk is. Same with for crude oil stocks. I think risk to the downside, folks, here is travel and industry, or travel and leisure, I should say. They've just been showing some weakness. Even things like McDonald's, Yum, starting to see some weakness on these pops, which is a little bit surprising if we're having that reopen trade going on. Having said that, with ConocoPhillips, you guys remember we were playing around with this trade where we were selling puts in there. Well, guess what? I got put that stock at around 80. Well, that didn't look so great when I got put to me at that level, but because we had picked a great level for a pullback, we've gotten that move to the upside now. So I'm long at 80. I covered some of them around 90, but left the rest on doing covered calls here. So with that said, remember, I sold the 120 calls in there. I'm trying to cover those as of right now. I sold them for about $1.30 off the top of my head, and they're trading right around 30 cents. So I'm working about half of that, trying to get out for about 15, lower the overall cost basis. To be quite honest, folks, I'd be happy to get out of this stock at 120 when the high here is 104. So I'm not too concerned about that one. I'm going to let that ride out there. Another one that I was concerned about, folks, remember we were doing calls in this, just short calls, because I don't have the long in Yum. I was just looking to do this as a trade because it was stuck down there around this point of control. And even if we started trying to migrate up towards that higher point of control, I felt that we would probably flutter in and around this area. So it wouldn't be too concerning selling 120 puts. Well, at this point in time, when we got tested on it, it was a little concerning. I'm not going to lie, but I played the probabilities out. Today, we're getting a little bit of a pullback. With that said, I'm going to have a short leash on this, or a quick trigger finger to get out of this trade now that I've been tested. But remember, when we're talking about probabilities on trading options, this trade that I was getting involved in was right around a 20 delta. That means that it only has a 20% probability of finishing 1 penny in the money at expiration. Now, I know that from my floor trader hacks that it's 2 times the delta is the probability of being tested. So I had a 40% chance of being tested during the life of this option contract. Well, that came to fruition. I did get tested. So now that it's pulling back away, those probabilities did come up. I was tested on those, was able to stay with it. I'm relying on the fact that I only have a 20% probability of being in the money at expiration at this point. And now that we're back to this point of control, most of this travel and leisure seeing a little bit of weakness, I'm going to hold on to this. But like I said, any type of support here or move to the upside, I'm going to be looking to pull the ripcord on my short calls in Yum. I'm also looking to cover a couple other things on the covered call front. What else was there that I had on the covered calls there? Actually, I'm trying to get out of a stock that's just a penny stock, so it's not a big deal. That's all I got for you guys. Risk equities still to the downside, although the risk assessment is not quite as severe as what we were talking about from before. I was pretty solid on the downside. Now we're going to be looking at, hey, are we breaking out of this finally? Looking for opportunities to get long. We still have high volatility in here, folks. So it's not an opportunity to just go out there and buy calls to take advantage of that. Volatility is way too high. I explain all of that stuff in our new webinar series here, Cracking the Code to Trading Options. So please make sure you guys are subscribing, hitting the little bell right next to it, because I don't always pop in here on the announced time. Sometimes it's a little bit early. And if you got that bell lit up, then you guys can take advantage of that. Comment? I don't see any comments over there as of right now. So I will circle back around, make sure everybody's clear of concept before you go. And that's all I got. Don't forget to smash the like button. If you can't take that, take it easy.